This John Lothian news video is sponsored by Independence, Expertise, Execution. What are your 3 points? 3 points communications.
How are you trying to grow your business in the U.S.?
We are working together with CME in marketing MexDer products in the U.S. And we are doing also our own road shows as part of the Mexican Stock Exchange Group. We are seeing Mexican participants actively trading CME products. We thought it was going to be the other way around. We thought that it was going to be much more interest from U.S. and international players into MexDer products. But on the contrary, we saw Mexican players' interest in the U.S. contracts traded at CME, basically commodities. So that was a great surprise for us, and that's why we are also thinking in expanding our product offering in MexDer into some kind of commodity-linked contracts.
How does MexDer strive for improvement beyond connectivity?
We just launched back in September a new trading engine for cash equities, which is a very, very fast trading and matching engine. We are having response times or latencies below 100 microseconds, which is very, very fast. And we are launching the derivatives portion of the trading engine next March.
What products are U.S. traders most interested in?
We are extremely bullish in the bond contract. The Mexican bond market is very big, is very liquid. We are starting to get a lot of interest on a derivative of that bond. So bond futures is the next big thing happening in MexDer, especially for hedge funds and these already active participants in the cash market looking for tools to hedge.
Are you seeing more customer or professional interest in MexDer products?
We have the high-frequency trading community interested. They find, obviously, MexDer as a smaller market than the U.S. market or the Brazilian market. However, we are seeing through professionals and FCMs and users' interest in basically, again, the future on the IPC, on the index of the equity market, and also the peso-dollar.
How is the new Facta implementation going to affect MexDer and its customers?
We saw this news very positive in the sense that instead of having the exchange or the repository, the securities depository, implementing each entity different agreements with the IRS in the United States, and then each bank or each broker that was going to be very complicated in order to have an exchange of information. So to do this through the Treasury and the Mexican equivalent of the IRS, I think is much more efficient.
How does trade clearing work at MexDer?
MexDer clearinghouse is called Asigna. It is a clearinghouse organized under the same principles as the major clearinghouses in the world. We use the margining algorithms that are standard with other markets like TIMS or SPAN. We have some fine-tuning of those algorithms for margining, but it's very flexible clearinghouse in the way that under Mexican law is the most efficient way to collect margins and, more importantly, to be able to execute those margins when needed.
What are the key economic factors affecting MexDer interest rate contracts?
We had a huge decline in volume, basically because volatility in that particular node is close to zero. And we saw that volume moving into the bond contract, as I mentioned before. So we have been able to translate from a very active short-term interest rate contract to now a more active bond contract.
How does regulatory reform in Mexico compare to U.S. Dodd-Frank implementation?
Mexican regulators are going to implement a sort of, it's not exactly a Dodd-Frank, it's more a G20 based regulation, but not as strict, perhaps not related to the so-called Volcker rule. So it's going to be more to create appropriate incentives to move transactions that are taking place today in the OTC environment into an exchange, and to be clear, just to add more security and transparency to the market.